A very good afternoon to you, Lucas. And now looking at that rate decision, was that reduction in line with your expectations?
Yes, inflation has been recorded at 5.4%. And core inflation at 4.8%. The reduction is largely due to the increased food supply and the reduction in the prices of food.
Well, we had some analysts saying that there are a couple of clouds ahead for the Ugandan economy, and the price of oil is one of them. We did have the central bank also saying that they don't see inflation declining any further. So what is your outlook for interest rates going forward given this scenario?
On the outlook on interest rates, basically what is happening now is that the yields on the securities have dropped to an average of about 9.8%, because the 1 year is at around 9.8%. Although the 6-month paper is at 10%. Well, given that kind of drop, we see offshores exiting our market, because the 20% withholding tax is not does not encourage them to buy into this paper. So what we see is possibly the interest rates might start picking up slightly, basically to support the shilling, which has depreciated to around 2.70 at the moment.
Yeah, looking at the shilling, we're seeing rates are coming down once again for the 5th straight time. What impact is that this latest interest rate decrease likely to have on the shilling going forward?
The impact on the exchange rate might have a negative kind of counter in terms of Bank of Uganda market, because having attained a drop in inflation to 5%, 5.4%, it's well in line with their target of 5%. But if this is happening the shilling, then they don't want to see that happen, because again, as I mentioned, the offshores are exiting the securities market because of the declining yield. So they don't want to see that happen, because they want to support the local unit as well.
Looking at commercial banks, they have been in the past criticized for not reducing the cost of borrowing in line with what we're seeing when it comes to the central bank in terms of cutting interest rates. What, in your view, do you think is keeping commercial banks from cutting rates?
On the front of influencing commercial banks to drop the cost of borrowing, it's largely driven by the contracted deposits, which were highly priced during the high interest rate regime a couple of months ago. Now that has actually contributed to the fact that most commercial banks are not going to drop their interest rates as fast as the central bank may want, largely because of the cost structure in terms of deposit mobilization. Now, as a competitive edge, you will want to see banks follow this, but it's not as fast as the central bank may want.
Well, thank you so much.
Because, again, their interest is to see that private sector borrowing increases. Well, but that will take some time for us to see the interest rates go now.
We have run out of time. Thank you so much for joining us, Lucas. That was Lucas Ochieng. He's a Treasury Manager at Orient Bank, joining us on the line from Uganda.